Our top story this morning. European leaders have lined up to denounce the EU's trade deal with the U.S., with the French Prime Minister François Bayrou describing it as a submission. The bloc has agreed to pay a 15% tariff on most exports to the U.S., alongside large investments in American energy products and military equipment, avoiding a 30% rate, which would have come into place on August 1st. In Germany, the Chancellor Friedrich Merz, who initially welcomed the deal, said that the country's economy will suffer as a result. Listen in.
I am not satisfied with the result, in the sense of this is good. I'm just saying that evidently more could not be achieved in view of the starting situation we had with the United States. In plain language, this means that the German economy will suffer considerable damage as a result of these tariffs. But I am quite sure that it will not be limited to Germany and Europe alone. We will also see the consequences of this trade policy in America.
In Spain, the Prime Minister Pedro Sánchez also criticized the deal. Listen in.
I've always said the same thing, and I value the effort made by the European Commission. I value the constructive and negotiating attitude of the President of the European Commission. And, in any case, I support this trade agreement. But I do so without any enthusiasm. One of the main lessons we must draw from everything we're seeing internationally, and especially when we talk about the US administration, is that Europe needs to get moving in all areas of strategic autonomy and trade relations with other countries.
So this has been the reaction so far from some of the European capitals, but we have to take a step back as well and figure out what's going to happen next with other parts of the world, countries that do not yet have any sort of agreement with the United States. So dozens of countries have yet to strike trade deals with the U.S. ahead of Friday's August 1st deadline. And President Trump has signaled that he will set a tariff range for most of the world from the start of next month.
I would say it'll be somewhere in the 15 to 20% range.
So maybe 15 or 20? Or?
No, I said, I sort of know, but I just want to be nice. I would say in the range of 15 to 20%. Probably one of those two numbers.
So time now to get a check on how this story has been impacting markets. At this stage, if we take a look at European futures, they are actually suggesting a slightly positive start to the trading day. But it's important to take a step back and figure out what happened yesterday, because it was a very volatile session when it came to European bourses. At one point, we had the benchmark up about 1%, trading at levels that we had not seen in 4 months. But later in the session, the initial relief that investors had felt after the announcement between the U.S. and the EU, that relief dissipated. And at the end of the day, we did see European bourses actually ending the session in the red. At the moment, however, it seems that it could be a different narrative at the start of today's trading day. But let's see where we're going to go next. There's still a lot of uncertainty when it comes to the compromise that the EU managed to strike with the United States, in particular for certain sectors, including the outlook here for the pharmaceutical space as well. But let me take you to the dollar crosses, because once again, some important moves in this part of the market. Let's take a look at the euro dollar. At this stage, we're basically flat when it comes to this pair. But yesterday, once again, very important reaction in the currency space. At one point, we had the euro down about 1.3% against the greenback, with some investors just looking at the announcement and thinking that the U.S. had the upper hand and that ultimately 15% tariffs on European goods will not be a positive for the European economy whatsoever. So that also put pressure on the common currency. But let me take you to where we are in terms of today's session in Asia so far. Let's get a check on that. If we take a look at some of the bourses across the Asian continent, we are looking mostly at a negative picture so far this morning. Indeed, still a lot of uncertainty as well about what the U.S. is going to do with other countries, in particular after the United States president suggested that the next global tariff rate will be somewhere between 15 and 20%. Let me also show you how U.S. futures are shaping up at this hour. Futures actually pointing to also a slightly positive start to the trading day for Wall Street. Just to give you a little bit of an overview here in terms of what happened yesterday on Wall Street, we did see the S&P and the Nasdaq once again hitting all-time highs during the session. So we still see a little bit of bullishness when it comes to some parts of the U.S. market. In the meantime, the U.S. Trade Representative, Jameson Greer, has welcomed the breakthrough in the talks with the EU, telling CNBC that Europe had recognized the legitimacy of America's concerns.
This is important because we have a $235 billion trade deficit with the EU. President von der Leyen of the European Union, she was very straightforward. She said this deal was about trying to reach balance. They acknowledged the legitimacy of the American challenge that we face as America with our trade deficit. But now we're just on a great footing to have a really good partnership with the EU, following on the heels of the big NATO win from the president a few weeks ago. This positions us to take our relationship with the EU forward in a new and a better way.
So we have looked at some of the reaction when it came to the political comments across the European capitals, but I want to show you as well how other parts have reacted to the announcement. If we take a look at what Bank of America said, they actually called the deal bad for the economy, but conceded it pairs tail risks and reduces uncertainty over relations between the two economies. Elsewhere, Wolf Research called it bullish, saying it had expected the U.S. side would be reluctant to reduce tariffs on car makers. Columnists at Reuters also branded the provisions on EU energy spend unrealistic, since it would require the redirection of most U.S. energy exports towards Europe, and the EU has little control ultimately over the energy that its companies import. Meanwhile, the Wall Street Journal investigated how Trump got the upper hand over the EU on tariffs as well, detailing how at one point, listen to this, the EU's lead negotiator was forced to find parking lots with Wi-Fi signal to search for documents while negotiating over the phone during his journey to Scotland. So this was ultimately a deal that was actually struck at the very last minute, if we take into account those reports from the Wall Street Journal.